What is your view on the Chinese banking sector?
The Chinese banking system will probably be one of the first sector to benefit from the recovery of the economy. It's going to be a mild recovery, of course, but cyclicals will benefit, and the banking sector will probably benefit, as always, because it's always like that when you've got a recovery. Now, in terms of health, there are plenty of uncertainties, of course, about the banking sector, with trust funds, with shadow banking, I mean, all the topics that we've talked about for the past 2 or 3 years, which is one of the reasons why the Chinese government wants to reform the financing system. And clearly Xi Jinping, in his first speeches, hinted at that when he said that he wanted to liberalize interest rates and to develop the bond market. So that's to actually lift the pressure on the banking system. So I'm not that negative. Trust funds, for instance, I mean, only one blew up. That was in December, out of the dozens of thousands of trust funds that exist, and that's because of the strong collaterals they have. So when you look at the banking system in 2012, it actually did pretty well. Now, the interesting thing is that Chinese banks are cheap, and they have always been cheap because of all these uncertainties that you mentioned. The way you should look at Chinese banks is like in a tunnel. They're all trading at between 0.8 to 1.3 times book value. It's the kind of things that you buy at 0.8, 0.9, and you sell it at 1.3 book value. Now, they all have high dividend yields. I mean, Bank of China, if I remember well, is about 6%, 5.5%, 6% dividend yields, very high. And all banks are paying very high dividend yield like that. So I see the banking sector as being an opportunity as long as it hasn't reached the 1.3 times book value, which is the ceiling of the valuation. And we are not there yet. So it's still something to be bought.
Do you see value in the Chinese real estate segment?
Well, real estate is something that has been discussed on, and for years and years about bubble, no bubble. My stance is that there's no bubble because there's an extremely strong demand coming from the Chinese population, and this has not abated. Government has succeeded actually in cooling down the market. Last year, property prices have not gone up, and volumes have gone up by 10%. Throughout the year, so the property sector is actually not doing quite well. If you look at the first quarter of last year, the Chinese government has forced, by limiting credit, they have forced property developers to sell a number of inventories, which they did, increasing their cash flows and basically unleveraging their balance sheet. So the property sector is not in bad shape today, and I would definitely look at this sector as one of the sectors to rebound together with cyclicals.
Why you are overweight on Southeast Asian equities or underweight on Northeast Asian equities?
Well, that's in our Asian exposure. Northern Asia, well, China looks good. We are overweight on China, especially since the fourth quarter, for all the reasons that we just talked about. So we like China. We are extremely negative today on Korea, talking about Northern Asia, and especially with Japan devaluating its yen. The impact on the industrial sector in Korea is strong. And that's why the Korean market has not really been going anywhere. Well, if anywhere, it was negative over the past few weeks. So I would be very cautious on Korea, and to some extent on Taiwan, because Taiwan has the same problem. The main competitors of the Taiwanese chip makers are the Japanese chip makers. So Taiwan and Japan are competing head-on, and Taiwan is suffering from the drop in the yen. So that's the picture on Northern Asia. When it comes to Southeast Asia, it's a completely different picture. I mean, you've got about 400 to 500 million people living between Philippines, Indonesia, Malaysia, Singapore, and Thailand. It's a booming part of the world with very young demography. I mean, very, very strong demography and very young people who are buying like if there was no tomorrow. The banking sector is in very good shape in Southeast Asia, simply because actually these countries are in very good shape altogether, because they were bankrupt 15 years ago at the time of the Asian financial crisis, and they managed to completely restructure their balance sheets with the help of the IMF. So today these countries are facing the world with a very, very clean slate, and as at the end of the day, they are extremely powerful growth engines for the entire region. So Even though I know that Southeast Asia is expensive, well, it was the best performing market. Philippines and Thailand were the best performing market last year. So far, in January, it has already been the best performing markets as well. I mean, the Philippines goes from high to high. And there's a reason for that. I mean, just go to Manila, go to shopping malls and see what young people are doing there, and you will be very, very impressed.
You think Asian consumer discretionary stocks are expensive?
No, consumer discretionary is a sector that has been hammered last year, everywhere in Asia, and simply because people were rotating their portfolios from consumer discretionary to consumer staples, which is the thing fund managers all do when the sky is getting dark and markets are choppy. So now we are facing the consumer discretionary sector, which is much cheaper than it was a year ago. I mean, you can find some great companies at 6, 7, 8 times earnings. In China, definitely, there are plenty of opportunities there, but even in places like Southeast Asia, you can find some consumer discretionary stocks trading at single digit, as long as you don't look at the index. You have to look below the index for mid-caps, which are not necessarily on the radar screen of the large portfolio managers, which are definitely value plays. So even in Southeast Asia, you can find value plays in this sector, yes.
Would you describe the investment methodology of the LFP JKC China Value Fund?
Well, we are value stock pickers. We look for companies that are not on the radar screen of large portfolio managers. We have a bottom-up approach which derives from private equity. I was myself in private equity in previous lives. And this allows us to look at companies that are not necessarily well known to the general public in Europe. But that's where we find value, and that's where we can find companies that can double or triple their share price in a rather short term. So we managed to outperform that way by about 10% the index, the MSCI China last year. We've been ranked pretty highly by Bloomberg. I think we're in the top decile. We have been getting a 5-star Morningstar rating. And this year, well, in January, we outperformed the index by 4.7%. I mean, we returned 8.7 as opposed to 4% for the index. And that's simply because of this bottom-up, value-driven strategy that we are focusing on. And this is not new. We've been doing that for the past 15 years. Thank you.